Hey there, everybody. Nice to see you in the room today. We really appreciate you being here for our very special webinar on Brexit. I'm here with Chris and with Eusebio, and we'll get right to the subject matter at hand. If you're a trader, then you're interested in Brexit, or at least you ought to be. And this is, by the way, a good example of just one of the things, little perks that you get when you take a Max course and become a Max member. These sorts of informational things are available to you frequently. This will give you a little chance to see some of the things that go on in the Max community of traders. We really appreciate Eusebio taking time to share out of his wealth of knowledge, many years of trading experience, the things that we should know about Brexit. So Eusebio, if you would, take it away and let us know what we ought to be aware of.
Sure, Craig. Thank you for the introduction. Hello, everyone. I hope you are all doing fine, and I'm really glad to see all of you here in this very small webinar. It will not be a very long webinar, but we wanted to share with you some important information because personally I believe that we are entering into a critical period, and we have to pay attention when we want, or when we consider to trade some pairs, especially the pairs containing the pound. So let me start with some observations. So here, and I have summarized them here in my PDF. I would like, first of all, to apologize for the quality of the PDF. I had not too much time to prepare or to pay attention to the forms of the presentation, but I consider that it is much more important that the content is useful. So we can make, or we have been able to make, the following observations since more than 2 years now. And the first observation is, since the Brexit vote 2 years ago, more than 2 years ago, and I will show a chart in a moment, the pound has been devaluated. The pound has weakened. And for many months now, the big boys are in fact playing a hard Brexit, so a no-deal Brexit. But we have seen very often the following behavior concerning the pound pairs. Whenever there was a positive events concerning a hard Brexit or related to a hard Brexit, for example, someone talking about the fact that the negotiations were not so good, and so the probability for a hard Brexit was increasing, a vote on any subject about the Brexit deal or any other event, for example. So we have seen for several hours, sometimes several days, the pound strengthening, showing that indeed the big boys were playing the pound long, on the long side. On the contrary, whenever there was a negative event relative to the hard Brexit and in favor of a soft Brexit, then we have seen very often the pound weakening, showing that the big boys were then shorting the pound. And when the market is waiting for an important decision, a vote or a decision by one side or the other of the negotiators, so the pound ranging. We have seen the pound ranging. Let me show what I mean here by these observations. Let me take here on my MetaTrader platform, I will consider the pound US dollar, and I will consider a long time frame just to have a large picture of the pair with the Brexit. Or perhaps the weekly will be, no, the month is a good time frame. Here you see this very long red bar. It was in June 2016. It was the day of the vote, the vote with the publication of the result of the vote. And the first partial result were coming during the London night, and here was the open of that day with the first result of the Brexit. And we have seen that indeed the price has been so weak for now many months. The weakening of the pound has started way before, when UK has begun to talk about the possibility of the Brexit, in fact, around this area 3 years ago. And so globally, the pound has been depreciated, if we consider the today price, by 2,500 pips, which corresponds approximately to 20%, a 20% devaluation. And since the Brexit vote, it's approximately a 10 to 15% devaluation, as was expected by a lot of economists and specialists about the UK economy and the European economy. But we can see also that in the meantime, so sometimes the pound was recovering a portion of its devaluation. Now, if we look at a closer, more closely what has happened, if we take, for example, a daily time frame, we can see something completely different. And let's make a compress of the chart. We can see that for several months now, for approximately more than 1 year, so the pound is in fact, the pound to the dollar is in fact not in a trend mode, but in a choppy mode. The price is behaving in a more erratic way, showing the difficulties not of the Brexit in itself, but the difficulties of the negotiation around the Brexit. Because it is indeed, personally, but this is just my personal opinion, I find strange that the negotiator of the Brexit on both sides are pro-European. And so on the UK, on the European Union side, it's normal, but on the UK side, it's a bit strange. But this is the way the government is formed, so in UK, and so it is what it is. So now, when we look more in details in smaller time frames, and I will take some last day example, for example, on the 15-minute time frame, the time frame doesn't matter in reality. We can see that sometimes the price seems to trend downward or upward. And so for several weeks, let me arrange my chart, for several weeks now, in fact, but in a rather chaotic way, sometimes with really strange behavior. And in fact, for many months now, whenever we see some fast jump or some fast drop, these fast movements were most of the time due to an intervention on one side or the other in favor of a hard Brexit or a soft Brexit. And so if we can have information right on time about this kind of behavior, of course, we can be better prepared to trade the pound pair, because, of course, if we don't know when an important event will happen, and that event has an important impact in the market, when we see, for example, the price is going upward, we may be tempted to take a long trade, and then suddenly, because something has happened around the Brexit, the price of the pound to US dollar reverses quickly and goes against the trade, and the trade can even end as a losing trade. And so this shows that, in fact, it is important to keep ourselves informed, or as best informed as possible, in order to understand what is happening in the context of the Brexit, and then to decide in which direction we have to privilege our trade. And so this is what I wanted to explain today, and to give you some tools or some approach or some content to help you better define in which direction you have to consider your trading bias. So the hard Brexit done is a no-deal Brexit. It's a Brexit without any deal between the European Union and UK. The soft Brexit is a Brexit, so UK leaving the European Union with a deal between the two future ex-partners. Okay, and this deal, in fact, the Prime Minister May has succeeded to have a deal with the European Union, but this deal is not considered as favorable for UK. Many think that this deal will keep UK strongly linked to the European Union, so they don't appreciate this kind of deal. But this is what we consider, in fact, a soft exit. A soft exit is an exit with a deal. Okay? And in the procedure of leaving the European Union through the Article 50, so once a country, member of the European Union, has mentioned it wants to leave the European Union, then start a period of negotiation of maximum 2 years to establish such a deal. And after that 2 years, if no deal has been reached, there is a possibility to extend the negotiations or not. It depends on the agreement of every member of the European Union. And for example, the point nowadays with the Brexit is until the 12th of this month, April, if UK doesn't come to the European Union with a new proposal, the European Union seems to refuse any extension. So de facto, the 12th of April, so just in a few days, now, next Friday, we should have a no-deal Brexit. But with politicians, anything can happen in a few hours. So, and this is why I say we are reaching a critical point now with the Brexit. So, if you consider what Prime Minister May is doing, she is visiting several important people in the European Union to try to convince them for an extension of the Brexit and for further negotiations. So, and the different parties, political parties in UK, try to find an agreement. So, to vote some kind of aspect of the deal, Prime Minister has succeeded to achieve. So we are in a real complex situation, and this is why I consider we are in a critical situation. Everything may happen now with the Brexit. So this is why it is. Let me just give you some example. If you remember, during the last weeks, when several votes has been made in the UK Parliament, so whenever the votes have been rejected, so we have seen the pound strengthening. And this has happened every time the Parliament has rejected any votes proposed by the government. So another more recent example was last Friday, early in the morning. Oh, I have a small typo here. Early in the morning. So last Friday, early in the morning, the Prime Minister has announced a request for a Brexit extension. And this is the reason why she is in Europe for the moment with Angela Merkel, with Emmanuel Macron, and so on. So has announced a request for a Brexit and a Brexit extension. Because the big boys are betting on a hard Brexit, the big boys consider this event as something not favorable for the pound, because they are still betting for a hard Brexit. And what have we seen last Friday? Now let me show you my chart. Last Friday, this was early the morning. So, and this is what the pound US dollar has made. The pound has dropped a good amount of pips. In fact, if we consider from this high to this low, the price has moved 135 pips. In fact, simply due to the fact that the big boys have reacted to that event of the Prime Minister requesting for an extension. And today, because we know that Prime Minister is in Europe for an important meeting, and the parties in UK are negotiating for with the hope to achieve some agreement, we can see that mainly the pound US dollar is ranging. So you see here two examples, practical example on how, understanding the context, we can have a better idea of the direction the price will take. So a bet or an event considered as negative for the hard Brexit, at least for the big boys, but who moves the market? The big boys will weaken the pound. When the market is waiting for an important situation, an important event, or an important result, the pound is ranging. And when there was something positive, the pound was going upward. And so this is no problem, Jan. This is in fact what I have made as a conclusion here today on this slide, just to give you some practical example. Now, when I say event, an event is something extremely general. It may be a vote, it may be a news release, it may be someone on both sides making an interview or talking, giving an opinion, and so on and so on. And so any such event may have a deep impact on the pound for the moment, exactly as any other geopolitical event may have an impact in the market. We have, again, nowadays, unfortunately, another example, clear example. You all know that there is a military escalation in Libya, and we can see that this said situation has an impact in the price of oil. Today we have seen a jump in the price of oil impacting many other markets. So, and I will come back to that to that situation in a moment in relationship with some pound pairs, not directly with the pound, but with some pound pairs. So, and so this is why, in fact, what is happening around the world may have an important impact in the market, especially in the forex, but also in some possible other market. And this is why we have to keep ourselves informed of what is happening. And when I say keeping ourselves informed, we have to consider only objective facts, because there are a lot of information. So if you Google through internet about any subject, you will have a lot of opinions, but an opinions does not make the market. It's better to consider only the objective facts. So about any aspect like economical aspect, geopolitical aspect, some central bank decisions, and so on. And so what I would like to advise is you make that exercise to try to understand what is happening, especially in the 8 countries concerning the forex, the main countries concerning the forex, so in relationship with the 8 main currencies, the US dollar, the euro, the yen, the pound, the Swiss, the CAD, the Aussie, and the Kiwi. And of course also what is happening in some large area in the world which may impact some commodities which are extremely important, like crude oil, like gold, and so on. And keep track of this fact for future reviews. Now, to keep track of this fact for future reviews, there are many ways to do that. If you keep a trading journal, for example, you can every day, when you make your preparation of your trading session, note your observations. Or if you come to know some information during your trading session, you can add these observations on your trading journal. But you can use any other way to keep track of this information. It can be simply a notepad, it can be Post-its, it can be simply a sheet of paper, it can be an Excel spreadsheet. So it's a good way to keep track of your observations in such a way that later, for example, at the end of the day, at the end of the week, at the end of the month, when you review your trades, review also the observations you have made and see how the market you are trading or the market you are following, because you can follow markets you don't trade, simply to observe the relationship or the correlations which exist between different markets. All the markets now are linked and are somewhat correlated positively or negatively. And so it's a good exercise to observe afterwards, when you post-review your trades, how the instrument you have traded and those you monitor have behaved in relationship with the fact you have observed, in such a way that you will develop over time you will develop your experience in a way to understand the impact of this fact on the market you are monitoring, and to see if your analysis has been good or has been wrong. And if either they have been right or wrong, you can understand why you have been right and why you have been wrong. And so by observing, by pinpointing this fact, this will help you to define, when you have to trade, your directional bias, which direction you will have to privilege in your trade. For those of you who were in the room last Friday for the non-farm payroll, remember what has happened. So when the non-farm payrolls information have been released, the non-farm payroll and the unemployment change, so my conclusion has been that the two numbers were not in agreement, and so the conditions were not appropriate to define directional and sustainable movement. And so once the volatility has settled down, my second conclusion was to continue to trade the underlying trend due to the global conditions. And the global conditions for the pairs I was monitoring, they were essentially the pound pairs, was to the downside because the context for the pound was negative. Remember what I have mentioned just a few moments ago, that request by the Prime Minister May for an extension of the Brexit, which was so again considered as negative by the big boys. And this is why I have chosen to consider only the short trade. And by the way, if you remember my chart, and I can show the chart very quickly, just a moment, the pound US dollar here. So the non-farm payroll was in this area. Let me widen a little bit this chart. So it is on the 15-minute time frame, but this doesn't matter. So the non-farm payroll was this large candles, and you can see that the rest of the day was simply a resumption or a continuation of the trend, which was already a downtrend before the non-farm payroll. This downtrend has started with that request by the Prime Minister. So because the non-farm payroll has had no impact, it was logical to consider a resumption or a continuation of this downtrend. And this is why I have taken only short trade on the pound pair. It was the pound US dollar and the pound CAD. So now, of course, when I say we have to try to keep ourselves informed as best as possible, this needs to know some sources of information, of reliable information. How can we follow this kind of information? So, and what I'm going to give you now is some links you can follow. Of course, you can follow the informations on any TV or radio channel you like, serious channel, of course. But there are some very important financial media you can consider. There are 4 important sites I personally always check every day. The Financial Times, which is a big newspaper and serious newspaper in UK. The Wall Street Journal in USA, and 2 important sites, which are Reuters and Bloomberg. There are general websites, financial websites, and I like to follow them, but not all the details. I will indicate what I like to check on these websites. Concerning the Brexit, and we publish these 2 links on our News Watch List webpage for the Max Trading System. So there is the calendar of the UK Parliament, which is an important source of information for the decision, for the votes by the Parliament. And so if you check every day before the day starts the calendar, you know if the Parliament will discuss and possibly vote some important subject, especially related to the Brexit. And then there is another website you can also follow, because it is updated in real time, which is the poundsterlinglive.com website. I will show you them. And you can also follow the news page of Forex Factory. So you have several websites you can follow, in fact, to stay informed as fast as possible about the events surrounding or related to the Brexit. Now, let me show you these websites quickly. So here, I have to set it on my screen here. So if we go on our website, so the maxtradingsystem.com/newswatch. So of course, the main portion is the calendar of the news as we consider the calendar. We pinpoint only the news which are important, which have an impact in the Forex. But before that, we have an important section here with some geopolitical or economical events we have to pay attention. So, for example, of course, the Brexit. And we recall the 2 main sites we can follow to stay informed of the important event, and so in order to understand what is happening, and so to take decision as right as possible. There are other areas we have to pay attention, or other subjects we have to pay attention, and you can see that last weekend we have updated our notes here with the situation in Libya and its potential impact on the oil prices. So you can see that they are updated not so very often, because these elements takes time to change or to produce sometimes an impact, but every weekend we pay attention to see if these subjects stay valid and if they need to be updated. So now let's consider quickly the different websites I have mentioned. The Financial Times, here you have just to, we don't need to read any articles in detail. What I do is I quickly read the headlines. For example, US names Iran Revolutionary Guard terrorist organization. May this kind of behavior have an impact in the market? I'm not sure, so I skip that that headline. Here, May enrages Brexiters with plan to join EU election. This may be a problem. And indeed, we can see that the Brexiters are becoming more and more grumpy in UK. If you have some friends living in UK, ask their opinion. I have some acquaintances and friends living in UK, and they all tell me that they become more and more grumpy and impatient to see their representatives, their politicians, to apply the Brexit decision, instead of playing that comedy we are seeing for months now. Pinterest seek $11 billion. Is it important for the Brexit? No, so we can skip it. Fink says BlackRock aims to control Chinese as major. Important for Brexit? No. So you can see immediately what headlines may have an impact. And then if you are interested, you can read. If you have a subscription eventually, you can read more in detail the article. But you will have to pay attention. So look here, leaving London, voices from the financial front lines of Brexit. When you read an article, a special article, pay attention if the article represents objective facts that everyone can observe, or if it is a pure opinion. If it is an opinion from someone, ignore that opinion and consider only the facts. Only the objective facts will have, in fact, an impact. Any opinion will have poor impact in the market. So we can ignore these opinions, which are usually personal opinion. So the Financial Times is such an important newspaper, but similarly the Wall Street Journal is also a very interesting one. And what I do is I go quickly along the headlines to have a quick idea of the market sentiment. And of course nowadays, and for 2 years now, I pay especially attention to the Brexit. And so for example today, for the moment, I don't see any special about the Brexit. So after the Wall Street Journal, I like to check also Reuters, which is an important news website. And so similarly, I go into the headline, and we can see here, so 30 minutes ago, Brexit hangs in the balance as May government talks with Labour. This may be extremely important. So we will have to see what the meeting between May and the Labour will give. So will they achieve some agreement? And so we know that something is preparing. Perhaps this may have an impact in the pound. And as soon as we will have the information, and if there is movement in the pound, we can understand the reason of this movement with the content of the agreement or the absence of agreement. So, and then after the Reuters website, I like to look also Bloomberg. And similarly, so we can follow exactly the same procedure. You see, Lord moved to present no deal as talk stumble, Brexit update. So this may be an important, and you can read eventually the content of the article if you want to have a little more details, and so on and so on. The Forex Factory news page is also interesting. So here you have fast headline with the last headline. You see here again, UK Labour, it was 11 hours ago. And when you have the time here, when the news has been posted on a website, you can check what has happened around that time on your chart. So Brexit spoken star, we have no found way forward yet. So, and here on the left side, you can check other news which may have an impact in the market, and especially nowadays for the Brexit. For example, here UK Prime Minister may consider giving the member of Parliament vote on second referendum in bid to break. So you can go on the article to see, to read more in details this information. So possibly, or to see if it is simply just a headline or not. And you see, it is a headline given by the Telegraph. The Telegraph is an important newspaper and serious newspaper in UK, and so you can have confidence in this kind of headline. And so you have precious information to follow and to pay attention with some follow-up about that kind of information. So never neglect that page of the Forex Factory website. It may be a very useful one. And then the two last I like to check. So it's the web page of the UK Parliament. And so with the UK Parliament, so you will have the schedule of every day of the week. So to the House of Commons and the House of Lords. I don't check what is happening at the House of Lords because in the case of the two houses are not in agreement, the last word will be to the House of Commons. So I pay attention only to the House of Commons. And so we can check every day what is the schedule of different aspects. So oral questions, urgent questions, and so you can check in details if some of these questions will be related to the Brexit, for example. Let's see if we have something today. We have nothing special today. Oh yeah, for example, here, visa for non-EEA citizens, but this is not the Brexit. And then you can check for Tuesday, if there will be something on Tuesday. But there is something strange with this website. We have to click on the Wednesday to have the schedule of Tuesday. There is a small bug on the website. And again, you repeat the process to see if tomorrow there will be something important concerning the Brexit. And so on and so on. So nothing tomorrow. Thursday, perhaps, let's see. Prime Minister question time. Maybe there will be something important there. And we know the time schedule. And so if you follow in direct the streaming of the UK Parliament, you will know what the sentiment will be around for the pound. And so on. And the last website I like to check is this one, the Pound Selling Live. So which is updated live. And again, what we can do is we can simply read the headlines. There are several headlines. And if you want to have more details, information, so you can click on the headline, and then so you will have the text of the headline you can read, and so you will have more detailed information to understand what is happening. But again, pay attention to take into account only the objective facts and not the opinion of the people who have written the article or a group of people being interviewed for this article. So only objective facts. So these are the kind of sources of information you can follow in order every day, and you can check that several times every day if necessary, to have a better idea of what is happening and to better understand what the buyers, the big boys, will take concerning the pound. And so you will be able to better filter your trades. If indeed on our chart we see that, for example, the context for the pound, for the Brexit was negative for the pound, so you will go short with the pound. So a pair like the Euro-US dollar, you will trade this pair short. If you like to trade a pair like the Euro-Pound, take me the 15-minute time frame, the Euro-Pound yesterday, so knowing that the context for the pound was negative, you would short the pound, and so you would trade long the Euro-Pound. And so this will give you, in fact, this will increase tremendously the odds to have good trades and winning trades with the pound pairs. In fact, if we observe today, let's come back now to the pound pair here on the 5-minute time frame. So the market is waiting for the decision around the extension of the Brexit requested by the Prime Minister and the negotiation between the different parties, so about the Brexit question. But for some pairs, we can see that at some point, so the price has begun to move. The movement, however, is not a big movement. The maximum distance between the high and the low of the day, which is this distance here, is only around 50 pips. No, sorry, 134 pips today. Today it's here, sorry. I was showing still yesterday with the down movement. Let me make a small compression of a zoom out of the chart. We can see that indeed the market is essentially ranging. And we know why. The size of this range from the high of the day here to the low of the day here was only 55 pips. If we consider only the European session, we have only even not a 40 pips range behavior. So clearly the market is waiting for something new about the Brexit, and we knew that, understanding what is happening with the actions taken by the Prime Minister and the fact that the several parties try to negotiate to have some agreement. If we observe some other pairs, we can see that on the pound Aussie, if I make a zoom out, the pound Aussie is nicely trending. This is an exception. The trend from the highest high to the lowest low is 135 pips. This seems unusual compared to the pound US dollar, but I will come back to that in a moment. The pound yen, if we observe the pound yen is essentially ranging, and we can see that the range for the moment from the high to the low, or the low to the high in this case, is only 67 pips, which is not a big movement, so we are clearly ranging. The pound kiwi is also mainly ranging. The pound kiwi is more volatile than the other pairs. This is why the distance from the high to the low is a little larger, but 100 pips for the pound kiwi is not a large movement. Typically, the pound kiwi has larger movement every day. If we take the pound Swiss, we will observe that the price is also mainly ranging only 56 pips. The pound CAD, has nicely trended today to the downside, so more than 100 pips. Yes, Chris, please. I'm going too fast, perhaps?
Yeah, you're being a bit like Jim. And your mouse is taking about 2 or 3 seconds to catch up. So if you can draw rectangles, that would help.
Okay. Do I need to restart from the first example, from the first chart, perhaps?
I don't need it because I could understand, but maybe for others. Okay. Does anybody want Eusebio to go back through the charts? And hi, I'm Chris, in case anybody's wondering.
Yeah, I apologize if I was a little too fast because I'm really excited with that presentation. So because this is a great information. So let's come back to the pound US dollar. So on the 5-minute time frame.
And can you flash back to your beginning page again, so people, like the very first piece where you said no deal is good for the pound, so that.
Oh yes, sure.
That'd be really helpful. Thank you.
Yeah, here.
I was going to ask, do a pop quiz, but yep.
So positive events for the hard Brexit is good for the pound. Negative event for a hard Brexit is bad for the pound. And when the market is waiting for a decision, so the pound is ranging. Typically, this is what is happening today. So now let's come back to the chart.
Cheers.
We can see that for the pound, essentially, the price was ranging. If I accept the dead period here, the first hour of the day, is never a significant period. So we can see that the range is really tight, so a range of around 40 pips. Okay, so the pound US dollar is ranging. If we consider now the pound Aussie, we can see that the pound Aussie, in fact, is trending. We have had essentially an important down movement, which is not in agreement with what we have seen in the pound US dollar. So the pound yen is also essentially ranging in a rather tight range for a pair like the pound yen. This range we can see from the highest high to the lowest low of the day was only 67 pips. So ranging. The pound kiwi is also essentially ranging with a little more volatility than the other pair, but this is not unusual for the pound kiwi. So a large range, but still not the usual movement we are seeing on the pound kiwi. The pound Swiss here, we can see that essentially, again, a small range from the high to the low of even not 60 pips. And we can see that range here was a pretty much small range for the pound Swiss. The pound CAD has nicely trended today, this down movement, as a movement of 126 pips. So we have two pairs for the moment, the pound Aussie and the pound CAD, having moved nicely today. And the euro pound, if we consider the euro pound, I will come back on the 5-minute time frame and I will make a zoom out of the chart. We can see that with the European session, the euro pound has nicely trended. And so when we see a pair nicely trending, so in this case the euro pound has moved upward, we can conclude that either the euro was strong or the pound was weak. And so with one chart we cannot decide. We have to check other charts. And if we consider the euro US dollar, we can see that the movement was exactly the same. So a nice uptrend movement, even starting before the London Open. So in this case, it was clear that on the other pair, the pound pairs were ranging. On the euro pair, the pair are going upward. So we have clearly a strong euro. And so consequently, with the euro pound, a weak pound. So when you interpret the movement of a chart, you have always to consider what the other pairs are doing to have a better idea if a currency is weak or strong. So clearly, the pound was not strong, but in a range behavior, the market waiting for something significant concerning the Brexit. Now, we have seen two pairs nicely trending, two pound pair nicely trending on the pound Aussie and on the pound CAD. And we can ask why? Why these two exceptions? You know that many events around the world may impact the market, and the impact may affect one market in different ways. And remember what I have mentioned a few minutes ago, the situation in Libya, which can impact the oil price. Let's observe the oil price today. Here is the chart of crude oil. And it's not a surprise to see that in this context, let me zoom out the chart. In the context of this crisis developing for several days now in Libya, it's not a surprise to see the price of oil going upward. And you know that there is a correlation between the price of oil and some currencies which are called commodities currencies. The CAD is such a currency. The CAD is influenced by the price of oil. If the price of oil goes up, this is good for the CAD. Why? Because Canada is also a producer of oil. And so we should see the pound CAD going in the direction of the CAD. And so with the CAD strengthening, and what has happened, so with the pound CAD, indeed, the pound CAD went down approximately at the same moment the price of oil was going upward. And so this down movement in the pound CAD was not due to the Brexit, but to the price of oil, which has moved upward due to the crisis in Libya. The crisis in Libya creates also a risk situation for the world. And so when such a crisis developed, there was another commodity which is interesting to observe, gold. And what has the price of gold done today? We can see that the price of gold has moved upward. And there are some other commodity currencies which are influenced by the price of gold. The Aussie dollar. The Aussie dollar is sensitive to the price of gold. There is a clear correlation between the Aussie dollar and gold. And so with the price of gold going upward, and after that correcting somewhat, retracing somewhat, it would not be a surprise to see the pound Aussie going downward, because the price of gold going upward is good for the Aussie. And so the Aussie should strengthen, and so the pound Aussie should go downward, and then a correction. And if we observe the pound Aussie, indeed, the pound Aussie went downward, and then the correction. And of course, there are other currencies. For example, with the behavior of the price of oil and the price of gold, there are other pairs you can consider. Any CAD or Aussie pairs could have been traded concerning the price of gold and the price of oil. And so if you keep yourself informed of all these informations, you can have a better idea in which direction individual currency will go, and so in which direction you have to trade the corresponding pairs. Okay? And so one of our members says in our Max room, USD CAD and pound CAD were my best trade today. I had no idea why. Now I do. Okay, Dan. You will make your homework to keep you informed what is happening around the world. Okay? Well, let's come back to my PDF. So is this kind of, is this explanation I have given and illustrated with the chart clear enough? Okay, I see some yes in the question area. I would like to have more reaction. Don't be shy to answer, so there is no wrong or right answer. It may be clear for some, it may be less clear for some other. If it is not clear, it's not your fault, it may be my fault because I perhaps not well explained. So never feel shy to give your opinion, and so to say if this kind of information is useful or not. So what else? I think I'm at the end here. So okay, some example I have shown. And so, yes, Chris, please, you want perhaps to say something?
No, I was just breathing hard. Sorry. It's, yeah, this is really good, Eusebio. nice and clear. Kind of cuts through some of the junk that you see coming through the news, wondering which way you think things should be going. Yep. Yeah,
indeed. Gerard asked, what is gold-oil relation with US dollar? Oh, it may be a difficult relation. The correlation is not always a good correlation. It depends. It's the comparison between gold and oil is more complex. So it's not so simple to say that when the price of oil goes upward, that the price of gold will go perhaps upward too. Many other factors have to be taken into account. If you want to know what is at some point the relationship or the correlation between two instruments, for example, there is another interesting website I also use myself, and I'm going to show you that website. It is this one, MRCI Intermarket Correlation, and so it gives in forms of a matrix On a rather medium term, we can choose, for example, 30-day correlation. This is the 30-day correlation matrix. You can see the correlation between a lot of instruments. Gold here is, let me see where it is. It is, I think it's this one, yeah, GC, M, so gold. And oil is CLK, this is crude oil. And so in this matrix, you have to consider the line of gold here with the column of crude oil, which is, it's not really easy to read. Where is the crude oil? It is this one. So crude oil, it is this column, and gold is here, this line. Yeah, this line. You can see that we have a correlation of minus 35%. Minus 35%. This means that there is, for the moment and for 30 days now, a negative correlation of 35%. And so this means that normally when price of oil goes upward, price of gold go downward. However, the correlation is not a good correlation. The correlation is too small. Okay?
Hey,
so
sorry, can you copy and paste that link somewhere?
Yes, sure.
Put it into our Max chat, and I'll paste it in the
of course. Here, Control V, and send. Here it is. There are other websites for correlations. Here, intermarket analysis by this one, by Milton, and so on, which gives other time frame. For example, 1 year, 6 months, 3 months, 1 month, and so you can see also if the correlations are the same. And you can take, for example, gold, again here, gold is on this line here, and oil, the contract for oil is, I don't remember exactly all the symbol, but I think it's CL, it should be CL, and so the correlation with gold here, which is on this line, gold, somewhere in this area. Let me read carefully. It's not easy. 43%. You see, 43%. So it's pretty much similar to the 35% in the previous website. And you have to take into account, it is a positive correlation here. On the previous site, it was a negative correlation. So you have to pay attention to the correlation. Generally, some site, it depends how the correlation is calculated. So it's not obvious you will have exactly the same number. So, but a small correlation, less than 50%, usually is a bad correlation. We may have a good correlation when the correlation is above 60-65%. And higher is the correlation, positive or negative, so better is the correlation. So pay attention, be extremely prudent when you analyze the correlation between two different markets. And if you want to have a quick idea of the type of movement this correlation will create between different markets, you can watch, for example, this website by Baby Pips, this page by Baby Pips, and I will give the link here. And again, you have to take this information very cautiously. So you see here, in a very simple way, when gold goes up, US dollar goes down. When gold goes up, Aussie US dollar goes down. When oil, let's see here, no, oil is not represented, so it's just a partial cheat sheet for just some instruments. So, but if you Google, you will find a lot of interesting information you can include in your thinking process when you want to make an intermarket analysis. So, yeah, indeed, Ralph, there may be a high correlation between crude oil and or the other oil, the Brent. The WTI is the Brent and the CAD, because the CAD is such a commodity currency, simply because Canada is an important producer of oil. Okay, there is always a reason why the correlation may be important between two markets. Okay? And so this is how you can try to keep yourself informed. Is it simple? Yes, it is simple. Is it easy? No, it's not easy because it takes sometimes to keep yourself informed. You have to check several sources of information. You have to check them several times, certainly when you prepare your trading session. And then if you have long trading session, for example, personally, I trade from the Frankfurt Open maximum up to the London close, so around 10 hours of trading. I check several times, so every day, all these websites just to keep me informed of what is happening and to try to understand as soon as possible the reason of a movement and to define, in fact, in a more formal and so better way the direction I have to privilege in my trade. Remember one important thing. Every losing trade you will avoid will have a positive impact on your trading account. Of course, you can miss a nice trade, but if you miss a trade, this doesn't hurt your account. If you have a losing trade, this may hurt your account. I prefer sometimes to miss a good trade, but if on the other side I avoid a lot of losing trade, I'm happy with it, because on the long term this will have a positive, very positive impact on my trading. So, okay, I have finished my presentation here of all the information I wanted to present. Any questions about these? West Texas, Jan, sorry, West Texas, you are right. The brand has another symbol. It's difficult to remember all the symbols. So, any questions about what I have presented here today? And I hope this information will be useful, and practice that exercise to keep you informed and to see how your research and so the conclusion you will have from your researches will have an impact in your trading. So, and pay especially attention to the Brexit. I firmly believe we are entering during these days in a critical period because there is a delay next Friday, this Friday, except if something else happens. So pay extremely attention and try to have as many information as possible, possibly live informations, to avoid to be trapped in bad direction with your trade.
Okay, thank you very much, Eusebio. If you have any questions, please put them in. We're running another series of courses at the end of that start this Friday, New York time. So if you want to get in with Eusebio, you're most welcome to come along. So those are the two courses that we're running. At the bottom is ETF Primer, starts next week. It's just for a taste, it's for the beginners. It's only got a couple of entries. It is profitable, and the ETF Standard, which is our flagship product with the profit acceleration and money management and ability to boost your profits, starts this Friday. And Eusebio runs that. And with these, you get homework and the access to the practice sessions on the weekends and whatever else Eusebio sort of throws up along these kinds of lines. Thank you very much, Eusebio, for letting us in on this. It's
my pleasure. My pleasure.
Yeah, it's been really good. Silence has asked a question. Can't get it. What about new? Sorry, Silence, I don't know what you're talking about. About
information about news, perhaps. For the news, yeah. Concerning the news, if your question, Silent, relates to the news release, so you have to make exactly the same kind of thinking process once a news is released. Let me show you quickly what you have to consider. And again, this is not easy. Let's go on the Forex Factory page and in the calendar page. So the economical calendar, okay? Almost every day, there will be a news release. For example, let's take here tomorrow, Wednesday, we have a very important news release. We will have the main refinancing rate for the euro, which is a decision by the central bank, the European Central Bank, and then the press conference by Draghi, so 3/4 of an hour later. And so this is an important news release. If you go on our website page here on our own calendar, you will have a subset of only the news which are important, and you will have an explanation on how to interpret the information we have for the news release. But the idea is the following. Let's suppose there is for the ECB a very positive news. This means an unexpected increase in the interest rates. I don't believe, but let's suppose we should see the euro strengthening after the news release. On the contrary, if we have a big negative surprise, this means a decrease of the interest rates while the forecast is a no change, we should see the euro weakening with big movement in the euro pairs in both cases. Big surprise, positive or negative, we should see movement. And this is the same way with every important news. The problem, the difficulty, and I cannot explain that in 5 minutes here, it is difficult to estimate the threshold when a deviation between the forecast and the data which will be released will be large enough to create a movement, an important movement in the market. I have some idea because I trade for many years now the market. I can say, for example, for the non-farm payroll like last Friday, if we don't have a deviation of 40 or 50 thousandths in the creation or the destruction of job, the non-farm payroll will not produce any movement, significant movement in the market. And moreover, that news release must be in agreement with the unemployment rate. And so each important news release has its own threshold level to create a directional and sustainable movement in the market. And you have to build that experience progressively because the conditions are always changing. And what was true 5 years ago is not necessarily true nowadays, and vice versa. And so this is why the subject is really a difficult subject. So, okay. But in our courses, we go deeper into these details. Thanks for your presence, and I hope you will find this information useful, and with this information you will trade smarter. So thanks again, and have a great trade this week, and in the meantime, take care. Bye everyone.